I'm Daniel Levine, and this is the Bio Report. The biotech sector surged in the first half of the year despite volatile markets. M&A and financing continue to be robust as EvaluatePharma weighs in with its Pharma and Biotech Half-Year Report. We spoke to Jonathan Gardner, Deputy News Editor of EP Vantage, about the trends in the first half of the year, whether 2014 will set new records for M&A activity, and the threats out there that may put an end to the good times. John, thanks for joining us.
Happy to be here.
EvaluatePharma just released its half-year pharma and biotech report. We're going to talk about what's happened during the first 6 months of 2014 and what's ahead in the second half of the year. It's shaping up to be a big year on many fronts, but as good as the markets have been, you know that while the NASDAQ Biotech Index beat the major indices, up 13% in the first half, it topped out in February and actually turned negative in April. What should we make of this? Does this reflect the departure of the generalist investor?
Well, I think what happened was that the generalist investors did kind of get a little bit scared at really how quickly and how far the biotech valuations got over the course of the first half. And I think that one of the things that threw them was the whole debate over, for example, the pricing of Gilead Sciences' new hepatitis C drug, Sovaldi. One of the things that makes it difficult for people to, I guess, support really, really high valuations in biotech is the whole idea that drug prices are unsustainable. So I think that really scared a lot of people. One of the other things that happened, I think, in the course of the first half, and particularly in the second quarter, was the whole debate over inversions. The prices of many of these biotechs are based around the whole idea that they can be acquired, and certainly, and particularly for some of the overseas companies, when the rhetoric heated up over inversions, I think that scared a lot of people out of biotech investing in general, even though perhaps it might, we might be discussing the NASDAQ here and American companies. I think it just sort of had this tendency to cool off the market through the second quarter. So I think that's why you didn't see the continued upward momentum that we saw in through 2013 and early into 2014 continue through to June. Now, I will note for the record that over the weekend we of course saw Roche's acquisition of Intermune for the idiopathic pulmonary fibrosis drug Esbriet, and that has and the price that Roche paid was well in excess of what anyone expected, and I will note for that just today, the NASDAQ has exceeded that February peak. So maybe we're back to where we were in 2013 and early 2014.
So among the big cap stocks, AstraZeneca, Eli Lilly, and Merck were the biggest gainers in the first half of the year, each for different reasons. These are not names I think I would have wanted to own at the start of this year. Does this say anything about how the year's shaping up?
I think it is, and in many ways, I think obviously these were all unexpected ones, but AstraZeneca was, of course, helped along by acquisition talk. Merck was helped along by having what is now perceived as the leading drug in the most exciting area in oncology, and Eli Lilly, I think, was simply a case of where people, suddenly saw value in what they were doing in ways that they hadn't seen it in the past. I know that's kind of a general way of putting it, but they actually had some clinical development and surprised people. So that would probably explain those three.
The big story in the first half of the year may be the M&A activity, which was on track to be a record year. In fact, it could have been a record already if the Pfizer-AstraZeneca deal had gone through. The rising biotech prices seem to sideline Big Pharma last year, but they've been active buyers. What are they buying, and is there a potential mega merger in the second half of the year that would put us into the record books?
Well, I think what you're seeing is a couple of different things. I think you're seeing companies, obviously, the U.S. companies seeking overseas assets in order to invert. Obviously, that was what happened with AbbVie and Shire. I think you're also seeing people buying.
And just for clarity with the audience, when we talk about inversions, we're talking about deals that are really driven by the tax advantages of shifting where a corporation is domiciled, so it's outside the U.S.?
Correct. And Ireland has been a place where people have sought to buy companies in the more recent past. But even UK companies are now becoming targets because the tax rate is relatively low in comparison to the U.S. and also there are certain advantages, tax advantages for domiciling your intellectual property in the UK. So anyway, the inversions are, of course, one of the more interesting aspects of this. But you're also seeing transactions, for example, the asset swap between GlaxoSmithKline and Novartis, where companies were trying to rationalize where they are strong and shed products where they are weak. So you saw Novartis and Glaxo trading products like vaccines businesses and oncology businesses in order to, beef up in one area and get rid of weak lines, weak product lines, weak businesses. That's another trend we are seeing. And then we're seeing at transactions, not to go back on this, but like Roche and Intermune, where clearly promising products and one product companies that have no real pipeline to speak of are putting themselves on the market, if you will, and Big Pharma is searching for assets that don't seem to be completely overpriced and have promise of fairly immediate reward. So an Intermune, for example, where a product is in the market and already on the market in part of the world and is about to premiere in the U.S., you're going to see more transactions like this of one product companies that are very close to the market or sort of just launching their products.
Well, in some ways, has Gilead's success with Sovaldi emboldened companies to do those types of transactions?
I think so. The prices are still out of hand, and I think everyone at the time when of Gilead's acquisition of Pharma in 2011 thought that was a really risky venture. It turned out very well for Gilead. Roche has its work cut out for it in turning Esbriet into the next Sovaldi. It's possible. Obviously, they were willing to take a chance on it.
You mentioned the inversions. Are we running a risk of seeing any kind of legislative blowback to put a stop to these, or is this something that's going to continue through the rest of the year?
This is going to be an ongoing story. It will last well into 2015, perhaps even through to the next presidential election, because in order to solve this problem, there has to probably be fundamental tax reform, at least in the U.S., and perhaps some sort of global compact to prevent between nations to prevent this race to the bottom. ultimately, companies want to have a zero tax rate. That would be the desired outcome for every corporation, and that is simply an unsustainable, I guess, trend for the global economy. So the U.S. has to have probably major tax reform in order for there to be any action on inversion. But I would make the case that it needs to go a step further, and actually the major economies of the world need to come to some sort of agreement to not try to outbid each other on tax rates before this can ultimately be solved.
Last year, I'd say we really saw big pharma out of the chase of biotech assets. It was really the larger cap biotechs that were dominant. Does the Roche transaction signal any kind of change there? I mean, are we going to start to see other big pharmas stepping up to the plate to go after biotech assets that way?
I think what you will see is very targeted transactions by certain companies, and Roche should be a good example of this, of very narrow companies that have, as I said before, products that are very close to the market and have a very a short time horizon before they start generating revenue. It's one thing to buy an a incredibly expensive asset that has a product that's 5 years from the market or even 3 years from the market. It's quite another to buy something that's perceived as overvalued, but at least in a year or two will start generating revenue for you. And I think there are certain companies that would rather take a chance on a company like Intramune than do big mergers and acquisitions. I don't think Roche is interested in doing a mega merger. However, I think that there are also companies out there that are looking for the big score. Pfizer clearly wants a big acquisition. And the Pfizer and AstraZeneca transaction is by no means over with. So I think that you will see both of these sorts of things happening. These narrow one product hits, certain companies that have very thin or marginal pipelines looking to bring in a whole new set of products by doing a mega merger. And then I think we will also see more action like Novartis and GlaxoSmithKline exchanging assets, trying to strengthen where they're already strong and get rid of products that are weak and don't have the sort of scale in order to make them truly profitable products.
We've had rather muted licensing activity. Any sense that we'll see a resurgence here?
I think that's part and parcel of the perception that biotech is overvalued. Licensing single products is also thought of as a high risk, very expensive thing right now. I think what it would take to see a change in licensing activities is the perception that biotech assets are development phase biotech assets are cooling down in terms of their price inflation. Until the Nasdaq slows down, I can't see that there's going to be much of a change in the current trends in licensing.
One other area that's been muted has been the approval of new high-value drugs. We've come off 2 very good years. We've got a much anticipated anti-PD-1, the immunotherapy from Merck that you alluded to earlier. But what does 2004 look like in terms of new drug approvals? Is there much to get excited about this year?
Well, there are still a couple of really interesting drug approvals that are coming up, and we did mention the Merck anti-PD-1 pembrolizumab. There's a possibility that Bristol Myers Squibb's anti-PD-1 product, nivolumab, would be approved this year, but it's not particularly likely. It's coming very soon after pembrolizumab. But we also have 2 hepatitis C combination products that will probably be approved before the end of the year, and that's the new Gilead Sciences 2-molecule product of Sovaldi and a second antiviral called the Dipivir. We've also got the Abbott 4-pill combination that is due to have its FDA approval decision in the fourth quarter. So there are two two very high value hepatitis C products, and also one very high value cancer product that are due by the end of the year. So it's slow going early, not much in terms of blockbuster potential so far in 2014, but we still have a few months to go in the year. So I think we will see some very significant products approved before the end of the year.
On the IPO front, we've seen some spillover into Europe. Actually, the biggest deal of the first half of the year took place in the UK, the $332 million IPO of Circassia. How does the second half of the year look? Are we going to see IPO market sustaining? Or are we going to see more activity overseas?
I think one of the things that happened, I think, is that simply that we certainly have had a bit of a summer lull. It will be interesting. I think this one's going to be a hard one to predict because of the uncertainty and the volatility in the NASDAQ right now. I think there were probably, because of what happened in the second quarter, I think a lot of people did pull back from doing IPOs in the second quarter. Now that we have seen, if what we're seeing this week with NASDAQ sort of returning exceeding its old peaks is sustained through September, it wouldn't be surprising to see October, November be very good months for IPOs.
So when you look out there, are there threats that people should be concerned about? Is there a potential for drug pricing to derail the good times? Is there legislation towards inversions or other things that really threaten to, disrupt markets, make it harder for companies to raise money? What should keep investors up at night?
I mean, I do think that those are the two sort of big picture threats to the good times that we're seeing in biotech right now. Payers are very interested in keeping a lid on these very high drug prices, and particularly in this area of hepatitis C, where there are so many patients and so much uncertainty about what the total drug bill is going to be. I think that the inversion rhetoric is not going to go away. It's a very good campaign topic for Democrats in particular, and I think that's going to be one thing that's going to continue into 2015 and 2016 is just simply the simple unsustainability of inversions out of the U.S. tax regime and into lower tax regimes is going to drive people to try and limit limit corporations from doing that.
What about pipelines themselves? I mean, part of what's really sustained this market has been true innovation, drugs like Sovaldi and others that have come to market. Do we have the pipeline to get people excited about and justify the prices we're seeing?
There is so much activity right now on oncology immunotherapy that it would surprise me. It would be surprising to see it would be surprising to see the sort of concerns about the pipeline that we saw, let's say, late in the last decade, and concerns about the patent cliff. I think that the FDA has been particularly encouraging in trying to get truly novel new products onto the market, and is now seen as a slightly friendlier, slightly more accepting, slightly more collaborative organization than it has been in recent years. And I think that just really encourages people to remain interested in early stage assets. And I think the pipeline it remains rich, as I said, particularly oncology, and I don't think that there's as much to worry about in terms of a patent cliff in coming years as we saw in the past 5 or 6.
John Gardner, Deputy News Editor for EP Vantage. John, thanks so much for your time.
Thanks for having me.
Thanks for listening. The Bio Report is a production of the Levine Media Group. To automatically download this podcast each week, subscribe to our RSS feed or through iTunes or other podcast manager. To join our mailing list, go to levinemediagroup.com. We'd love to hear from you. If you want to drop us a line or are interested in sponsoring this podcast, send email to danny@levinemediagroup.com. Special thanks to Jonah Levine, who composed our theme music, and the Jonah Levine Collective, which performs it.